our top story. House Speaker Lord Alan Velasco vowed to fast-track amendments to the Anti-Money Laundering Act of 2001. This as the country risks being included in the gray list of the Financial Action Task Force, or FATF, if it fails to tweak the two-decade law on or before February 2021. Velasco said the House will see to it that the measure, which aims to curb the cost of doing financial transactions of OFWs and the business sector, will be approved expeditiously once plenary sessions resume in November. President Duterte certified the bill on AMLA amendments, or House Bill 6174, on Friday, the last day of the Chamber's special session. House Bill 6174 was approved by the House Committee on Banks and Financial Intermediaries last March. Panel Chairman Juni Kua says that the bill will be tackled for second reading approval when session resumes on November 16. Kua says key amendments include provisions in tax crimes in line with FATF standards. Also, under the proposed changes, the Anti-Money Laundering Council would be given the power to investigate suspicious transactions upon its own determination. The council may also implement target financial sanctions, such as freezing assets directly or indirectly owned by individuals identified by the UN Security Council. Senate Committee on Banks Chairman Grace Poe also vowed to immediately act on the measure, but notes that discussions would still be efficient and transparent. Bills amending the AMLA are still pending at the Senate committee level. All right, Dan, like what you mentioned, a happy Monday, the start of a new trading week here. Lots of exciting movements on the home front. But first, give us a roundup of global equities.
All right, well, you can see on my terminal here how Wall Street had performed rather mixed on Friday's session. You can see the Dow Jones up by 0.4%, the S&P 500 generally flat, and the Nasdaq pulling back a touch. That was down by 0.4%. This amid, a lot of debate still on the stimulus talks here. You've got President Donald Trump over in the U.S. actually pushing for bigger than what has been proposed by the administration. But you've also got the U.S. having a fifth consecutive day of COVID-19 infections, over 50,000 people. And in Europe, it's actually very interesting to see Europe closing in the green yesterday. That's as you've seen, cases over there climbing. Italy, for instance, swelled to a daily record, and the government there is preparing even new containment measures. Rumors are they might be lockdowns again in certain regions. Now, you've also got over in Asia, all eyes on the third quarter GDP print over in China. We're going to be checking in on that later on. Meanwhile, I really don't have movement yet when it comes to the Chinese stocks there, but you're going to be seeing Japan opening in the green, pretty strong showing there for the Nikkei 225, up by 1 1/10%. Over in Hong Kong, also not yet open right now, or at least I'm not getting that info from the terminal, but you've got Taiwan also in the green, up by 0.8%, the Kospi as well. So I guess you can say that it's a pretty strong opening over in Asia. Meanwhile, just speaking about the Chinese third quarter GDP, that's expected to have climbed, get this, Jess, 5.5% from 1 year ago. China is still doing really well in the third quarter. Wish you could say the same for the Philippines. Nevertheless, retail sales, investment, and industrial production are all forecast to be picking up in September. Now, let's move on to our own domestic markets here. A lot of good things as well, let's say, especially over the weekend. So you've got the Philippine House, so that's the Congress, having passed this 4.5 trillion peso budget. That's amid all of these... Finally, leadership debates between who's going to be the new speaker. There's now a resolution in that case, but still this budget, of course, needs to be approved by the Senate and then is awaiting the signature of President Duterte. Hopefully that happens before the year ends. But you can see right away in the first, let's say, 6 minutes of trade, we are up by 0.7%, closing in on 6,000. Whether that's going to happen is anyone's guess. But one other important, let's say, development over the weekend is that the government has eased the stay-at-home rules. and is now allowing outbound travel. Okay, so that's even outside of the Philippines as the spread of the virus is slowing. Recall that last week we saw, let's say, the slowest increase in daily cases in the past 3 weeks. So it's sort of getting slower. So what are the rules now? Before, it was only people between 21 and 60 that could actually travel. Now it's going to be 15 to 65. So medyo nag-increase na yung range of the ages, and that's also going to cover non-essential outbound travel allowed from October 21. So a lot of analysts are looking on that, especially on the tourist front and consumption front. And they're seeing Philippine shares expected to show some signs of improvement. Recall that last Friday we were down by 0.7%, and turnovers for the week were pretty weak. So we had you were down by 41% last week, and net foreign selling, however, that's a good news. It was actually trimmed, so we're still on 26 consecutive days of net foreign selling, but that was down 30% last week. But nevertheless, year to date, we've still lost $5 billion in terms of net foreign selling. Now, just a quick peek, and I'm really interested to see which one are the sectors here staging gains. And you're going to be in my terminal holding firms the strongest this morning. That's up by 0.7%. But all across the board, a pretty broad recovery, just as analysts had predicted, especially after that budget was passed by the lower house. Now, another thing that I really want to be watching out for here is the mining and oil counter. We had seen that on Friday staging dramatic gains, let's say, after President Duterte had lifted the moratorium on exploration of oil in the West Philippine Sea. And we've got more info on that. So I'm just going to pull out the chart for you so you can see here how that's performing. Are they even staging? Look at that. In one day, PXP Energy already another day of ceiling. Up by 50%. So that's done. That can't be traded anymore. Also got Apex Mining and Philex as well staging some continuing those dramatic gains that we saw last week. So what's going to happen here? You've got, of course, the Philippine Star reporting that local and foreign firms are eager to explore the West Philippine Sea. That's according to DOE Secretary Alfonso Cusi. MVP is eager to commence drilling activities already, and Udena has already submitted a proposal to the DOE to explore for oil even before the moratorium was lifted. So that was already September 25. And as I mentioned, stocks grows the most in 5 years. And not just, Dennis Uy and MVP. You've also got Roberto Ongpin's Atok Big Wedge that also rallied close to 50% last Friday. Now, another one that is looking at the sector is Astro Del Castillo. He's at First Grade Finance, saying that this move could actually sustain investors' interest in a sector that has been speculative and moribund. So maybe that speculation can start becoming real, diba? As they start seeing what's really going on there in the West Philippine Sea. Why the interest, especially from the MVP group? Now, according to a source we had, they said it's part of the vision of MVP to have an integrated energy business. So recall that they own, of course, Meralco, and they want to have that from downstream to upstream. Dennis Uy is also trying to cement his role in the power sector. They've recalled that they've just acquired Chevron's 45% stake in Malampaya. So MVP Group also looking at that stake in Malampaya. So a lot of very interesting things here. Now, one big concern of investors here, it's what's going to happen with that dispute in the South China Sea, diba?
Yes.
Now, Cusi is saying that, I'm sure, and I quote this, I'm sure China will respect our decision. We have to stand up for our rights. We know our rights. He says, this is also according to the Foreign Ministry spokesman, Zhao Lijian. He told in a news briefing over in Beijing that that China and the Philippines have reached a consensus on the joint development and exploration. So they hope that the two sides can actually work together. So if there are a lot of issues still on the ground in terms of that dispute, but at least both sides as of now willing to work on a joint exploration agreement, Jess.
All right, definitely. And of course, you have our authorities really banking on that exploration to somehow help the economy rebound from the pandemic. But Dan, from oil exploration, let's move on to the financial space. One of our oldest, most traditional lenders now looking to jump in on the digital wave. What's our plan here?
Okay, so this is PNB, right? That's Lucio Tan's, crown jewel when it comes to the financial sector. I just Wikipedia that it was actually established in the American Times Past. It's one of the most traditional banks we've got here. It used to be a government bank, and we have had Vic Veloso,
Mhm.
the CEO of PNB, on the show just last year, and he was saying how brick and mortar is still a very big component, but it seems that now they're pivoting and they're looking at really studying establishing a digital bank. They're actively reviewing the regulatory scheme, whether they should set up basically a subsidiary of PNB or a completely independent entity. Recall, we just have like a couple of digital banks right now. So that's ING and CIMB of Malaysia. And also, the BSP right now is limiting to 5 digital banks per year that they'll be approving every year. They can actually extend that if they decide to. But for now, you still need to actually create the license. So they did mention that they've allocated 2.5 billion pesos for technology
Mhm.
upgrades just this year. That's amid reporting an 18% increase in mobile transactions in the month of June. Even as of course, amid the enhanced community quarantine and transactions over the internet rising 142% as of the end in September. So trying to bank on all of these transactions, of course. But another thing they're looking at is possibly reducing the bad loan provision. So recall that in the first half of the year, we've had the banks, let's say, being proactive in terms of setting aside loan provisions. PNB in
Mhm.
particular earmarked around 9 billion pesos from January to August. They said they may claw back some cash. They said that in the third quarter, they're also already seeing rather some improvements. It's just a question of finding out whether they will keep this until the end of the year or start to reinstate. So very interesting there, at least some bright spots when it comes to the loan losses. They may have actually extra cash there from the provisions they set aside. So a lot of very interesting things there. They did, of course, mention their plan to sell some prime properties to, of course, reduce all of those loan learning assets. PNB opening in the green right now, up by 0.4% to 24 pesos and 25 centavos. So just still on the equity space, we do know that the bourse has been very keen on easing the
Mhm.
requirements for listing amid this pandemic. So a lot of traders are saying that that may spark interest. Tell us more about that.
All right, just to contextualize things here, you have, of course, like what you did mention, a lot of investors saying that, this easing of rules might actually result into more firms wanting to list in the local bourse. But this time, you have one particular analyst here, COL Financial to be exact, say, this might actually spark interest from tech firms, especially since they're the ones who are really booming amid the pandemic here. Now, let's contextualize everything here. Of course, you have the boards proposing some easing here. They're doing away with the 500 million peso minimum market capitalization requirement, especially for the main boards. And at the same time, one of the main changes as well here is that they are going to focus on net income here, removing basically, the positive EBITDA requirement in 2 of 3 years before the application for, especially for the small businesses board here. Now, at the same time, you have April Litan here of COL Financial saying, with a boom in digital transactions over since the start of the pandemic, the new rules may actually attract more tech firms to invest in the PSEI. Now, most likely, according to her, most likely those who will go public are those disruptive businesses under the new normal. So these include, the mobile wallets, the food delivery businesses as well as online shops. According to her as well, traditional businesses like banks, property and retail and even restaurants are more vulnerable to the pandemic. That in turn results to weaker earnings and dampens investor sentiments really. So also, very interesting here. They came up with a study here, a look at other countries and their indices, and it really shows that the strong performers are those that actually grow despite the crisis here. In the US, for example, you have the likes of Amazon and tech firms. In fact, according to COL here, in the S&P 500, if you remove the tech issues, the index would actually be performing weaker. In Asia, for example, it's zeroed in on what's happening here in Asia and the Pacific. It would show that the likes of China, South Korea, and Taiwan, in fact, are outperforming the rest of the region because they have high exposure to tech firms. China, for example, is over 23% the exposure in tech firms. Taiwan is 51.8%, in exposure in tech firms. And you would see here, they have really been increasing or resurging over the past months despite the pandemic. So what are the possible firms here that COL Financial mentioned might actually be interested, in going public? You have the likes of InstaPay, there's also PesoNet, GCash, and even PayMaya. Now, according to Mint or Globe FinTech Innovations, they are open to an IPO for GCash, but no specific plan at the moment just yet. According to them, they are of course still in the mission of providing value to stakeholders, whether it be as a private company or through public offering. And that IPO is something that they can talk about in the future. That at least according to their CEO Martha Sazon. Mint, according to them, has seen exponential growth during the pandemic, even despite the relaxation of quarantine rules. And it really shows for them the importance of digital services. Again, those new set of rules for listing requirements is still up for comments, and the PSE is currently evaluating those. But lots of concerns as well. You have some investors saying they need to issue more protection guidelines, especially for investors here once you try to relax the rules on listing.
Super interesting, Jess, especially since several analysts have said, one of the reasons that maybe we haven't had a strong showing is because we don't have enough tech firms in the index, and then even just in the boards in general. Just quick peek on our year-to-date of the PASHER. So that's, of course, the all shares listed. You're going to be seeing us down by 22.5%. And look at those mining firms. Those are now outshining everyone else, not just in the index, but also in the boards in general.
Now, here are other headlines we're keeping our eyes on. The government is looking to cap multilateral lenders in financing a free COVID-19 vaccination program for the Philippines next year. Finance Undersecretary Mark Dennis Joven said the department is considering capping new loan facilities under the Asian Development Bank and the World Bank. Budget Secretary Wendell Avisado said the government may allot up to 40 billion pesos for the program that will provide some 20 million Filipinos with free vaccines. The previous estimate was at around 20 billion pesos, which the Finance Department said could be sourced from government banks. The government has yet to determine the total amount needed for the mass vaccination campaign, but the DOF said sourcing the 40 billion pesos from multilaterals is doable. Under the 2021 budget, 2.5 billion pesos has already been allotted for the health department for the procurement of vaccines. The DBM said another 10 billion pesos under unprogrammed appropriations has been allocated for vaccines. Now, the Trade Department and Toyota Motor Philippines have started talks on what can be done on the Comprehensive Automotive Resurgency Strategy, or CARS. Currently on the table are possible adjustments given the difficulty faced by participants of the program in meeting the required production volume. Toyota wants the government to extend a 6-year period given to participants to meet their production targets of at least 200,000 units of their enrolled vehicle to enjoy government incentives. The CARS program was created to support local production of car and parts. Internally, TMP is expecting slightly higher overall sales for the year compared to its mid-year projection of a 40% decline. Internally, TMP is expecting slightly higher overall sales for the year compared to its mid-year projection of a 40% decline. Recall that Toyota sales fell over 35% both in August and July. But a recent uptick might be paving the way for an early rebound, as the company is noting that September sales recovery is coming in higher than in preceding months.
And some more spending is what the country needs. That's according to Finance Chief Sonny Dominguez, noting the need to revive consumer confidence amid this pandemic. Dominguez told Bloomberg that consumer confidence is crucial to economic recovery. He said it is important for government and businesses to restore consumers' confidence to spend. That's by ensuring health and safety measures are in place. He insists the government is handling the pandemic in a prudent and decisive manner, and that measures are being implemented within the country's means. Meanwhile, Malacanang is studying a proposal for the government to subsidize small business employees' 13-month pay. That's as MSMEs face financial constraints due to the pandemic. Palace spokesman Harry Roque said the president will be in talks with the Finance and Budget Department for this. Last week, the Labor Department made it final that there will be no deferment of the 13-month benefit for workers this year. The Philippines is likely to be the worst hit in Asia in terms of joblessness. That's according to a Bloomberg survey, with unemployment seen climbing to 13%. Okay, guys, we're still in a lockdown. Every little inch of good news feels like a triumph, especially for market starved catalysts. Here to share with us what this week will be looking like, we have AAA Equities' President Matt Cabangon. Hi, Matt. Welcome back.
Hi, good morning. Happy to be here.
Good morning.
Matt, okay, so a lot of good things, let's say, happening over the weekend, and we woke up to some good news here. Also, the bourse opening in the green, so budget almost there for next year. Lifting of travel restrictions, possibly easing in terms of cases of COVID-19 here in the country. So a lot of things happening, and the West Philippine Sea moratorium also lifted. So better times coming for us.
I certainly hope so. It's been a pretty uneventful few months as far as price action in the market has been concerned. Now we're seeing mining names flying. We have the Converge IPO coming up. So yeah, I am optimistic that things will start turning around for our market. Quite frankly, the last 3 years of PSE investing has rewarded those who were defensive. I think that regime change is coming, and it's time for investors to get back and show this market some love.
Okay, so let's talk about the miners before we go back broadly, because these are the ones that have been really in the limelight last week. Now, tell us how, a lot have been saying these are speculative stocks. Every time there's some sort of news, it jumps to ceiling and then it gets sold off very quickly. What is the possibility that this is actually it? This is a sustainable rally. This lifting of a moratorium is what people have been really waiting for, and you can actually start pricing in these developments when you do valuations of the prices of these stocks?
Well, to the degree that this is sustainable is a huge unknown. Right now, like we saw this morning, PXP just opened up to the ceiling again. Its market cap is now 22 billion pesos. Luckily for us, we know how much Malampaya is worth because we saw that sale by Chevron earlier this year. And that sale of 50% of Malampaya is worth roughly 29 billion pesos. Applying that same value to PXP's share in Service Contract 75, so we see that there's a gap, 29 billion worth of Malampaya, 22 billion worth of market cap. But we're basically pricing in that everything here is certain. It's going to be about a decade before PXP or any miner is going to be able to monetize whatever reserves are down there. And investors need to keep in mind that while this moratorium has been lifted, this is still a hotly contested geopolitical region. So between today and once this thing actually starts making companies money, a whole lot can happen, even outside of the normal risks of oil exploration, which in itself is highly speculative.
Okay,
All
so
right,
a
Matt,
lot of
from miners. Go ahead, Dan. Go ahead.
No, I was just saying, so a lot of speculation still on the table. It's still a trader's play for you.
Absolutely. This isn't something that investors should be buying and holding. The headlines can switch one day to the next. So I think people who are buying this issue should be flexible and be ready to hit that sell button in the event things turn sour.
All right, Matt, let's move on from miners to banks here. One thing of interest here, like what we mentioned in the headline of the newscast here, you have the AMLA now really, in Congress, in fact, really rushing to move for the amendments here when it comes to the Anti-Money Laundering Act here. That, of course, is going to result in more stringent rules on banks, while at the same time, easing financial transactions here for OFWs here. I mean, how is this going to affect the play on banks, which so far during the pandemic has already seen a boost, in fact, in bad loans?
Yeah, right now, people are viewing this measure as a net negative for banks, right? Nobody likes additional regulations on banks. But I think the counter side to this, the Philippine banking sector has had a pretty bad rap. Just look at this year with the Wirecard scandal that named BDO and BPI as potential destinations for their fraudulent money. So I really do think that adding some more regulations in relation to money laundering will help boost the status, the reputation of our local banking sector internationally. And while this may incur some more costs on the banks in the short term, I think this reputational boost will help foreign investors get back and invest in Philippine banking.
Okay, but Matt, now moving from banking over to property space, I mean, you have a lot of liquidity that's being released right now. You even have, the central bank allowing them to loan more to the property sector, but then the property space does not seem to be needing a lot of that, especially as people are leaving right now. So there's not a lot of capex that is going on. There's now, a latest report from Bloomberg that David Lichu says 17% of the office space could actually be vacant by the year end because of the POGO flight out. So how can you reconcile, easing in terms of the interest rates, a lot of liquidity on the floor, but then the property space also seeing a vacancy or an exodus?
Yeah, I don't think the property sector is going to be what leads this market moving forward like it has done in the last few years, right? So the last few years, it has been a POGO-driven, real estate-driven market rally. I don't think that this is going to be the same case looking forward at 2021 and beyond. I think the liquidity is going to have to flow elsewhere. There has to be big innovations that will happen at the consumer discretionary level, for example, at the banking level, as another example. So I don't see the playbook of the last several years applying as far as market dynamics are concerned in the post-COVID world.
Okay, so
All right,
defensively
Matt,
is not the property space anymore.
All right.
Go, Jen. Sorry.
Matt, let's take a step back and zero in. Let's take a step back here and take a look at the market in a broader way here. For one, you have, of course, the bourse considering easing their listing rules here in a way to attract even smaller businesses here to list on the local bourse. While that may be a positive here for the bourse, you have some analysts saying it may actually pose some risk here, especially for investors, since they're thinking, if these businesses would actually be challenged, then they may actually be suspended or delist in a way after being challenged. So do you think this easing of rules, is it going to be a boon or a bane for the index?
Well, as a stockbroker myself, this topic is near and dear to my heart. I would love to see these rules relaxed. I mean, we want to see names like Paymaya, like Voyager, the people behind, the people behind Paymaya, Gcash. We want to see these names listed. I think the concern that this introduces a bit more risk to the market is justified. But I mean, that's the whole purpose of the stock market, right? Let's let free market forces determine what sort of prices we're willing to pay for risk. This market isn't supposed to be holding everyone's hand and really only listing the bluest of blue chips. I think it's time that our exchange evolved. If we look at exchanges in the West, it's been tech names that have kept their bourses afloat in the last 9 months. We here in the Philippines are a bit behind the curve. We've been leaning on internet service providers, which is sort of grasping for straws if you're thinking about tech. So I really do think it's time for us to be moving that direction, and I'm a big supporter of that.
Okay, so let the markets take on the risks and make decisions for themselves. That, as of course, our bourse is heading towards 6,000, hopefully up by 0.6% this Monday morning. Thank you so much, Matt Cabangon, AAA Equities President.
Thanks for having me.
And that's the first look into the business day. Today is October 19. I'm Danie, Laurel.
Catch us again tomorrow at 9:30 a.m. I'm Delos Santos. We are One News.